Today, we're diving into a really fascinating financial story our source material lays out. A tale of two neighbors, India and Pakistan. Now, they might share a border, but when you look at their capital markets, they are worlds apart. So let's get into why that is.
All right, let's kick things off with just one number. Over 110. That's how many unicorns, those billion-dollar startups, have come out of India. It's a huge number, and it tells you a lot about the country's innovation and just how much investors believe in it.
Okay, so now let's take that same yardstick and measure Pakistan. The number of unicorns there? Basically zero. I mean, the difference is just wild. Over 100 on one side and pretty much none on the other.
So that begs the question, right? What on earth is causing this massive gap? Well, the answer isn't just about startups. It actually goes way deeper, right down to the foundations of their financial systems.
And look, this split didn't just happen overnight. The divergence really began in their core public markets. We're talking about the stock exchanges that are like the heartbeat of a nation's economy. Now, before we go further, let's just make sure we're on the same page with one key term: market capitalization. All it means is the total value of all a company's shares. It's basically how the market sizes up a company. You can see this divergence play out perfectly in their main stock indexes. India's Nifty 50, which tracks their biggest companies, has just been on a tear, showing really strong, consistent growth. But Pakistan's KSE 100? It's been a whole different story, kind of stuck in neutral for the last decade. It's a classic tale of growth versus stagnation. And this isn't just about lines on a chart. This difference in market performance has a massive real-world impact on wealth and investment. Let's look at the actual numbers. That performance gap created a huge wealth effect. Get this, India now has over 1.2 million millionaires. That creates this incredible pool of money that can be invested right back into the economy. In Pakistan, that number is somewhere between 5 and 10,000. The scale isn't even comparable. And when we look at venture capital, which is basically the rocket fuel for startups, that gap turns into a massive canyon. India pulls in $25 to $30 billion a year in VC money. Pakistan, less than 100 million. That single difference pretty much decides how many new, innovative ideas can even get a chance to grow. Which, of course, brings us right back to the unicorn. Just a quick reminder, it's a startup that's valued at over $1 billion. And honestly, it's next to impossible to get to that level without the kind of massive funding we were just talking about. So here's the real takeaway. The startup scene isn't just some fun side project for an economy. No, it's the main event. It's the battleground where future economic growth is won or lost. It's where the next generation of powerhouse companies is born. So how did India pull this off? How did they build such a powerful growth engine? Well, the sources point to a pretty clear three-part formula that completely reshaped its financial world. Yeah, this kind of growth was no accident. According to our source material, it was built on a very deliberate playbook. First, they focused on investor education. Second, they pushed through major regulatory reforms. And third, they went all in on a digital revolution. Let's see how that all came together. Okay, let's break it down. First, investor education. By teaching people about finance, they brought millions of new investors into the market. Then, reforms. They made the rules more investor-friendly, which built a ton of confidence and attracted a flood of foreign money. And finally, the digital revolution. Things like online trading and digital payments made it super easy for literally anyone to get involved. These three things fed off each other, creating this incredible cycle of growth. So this brings us to the real lesson here. What this source material suggests is that India's success story can actually serve as a kind of blueprint for Pakistan. Not something to just copy and paste, but a set of core ideas to adopt. Right, the goal isn't for Pakistan to become a carbon copy of India. It's about taking the principles that worked, things like boosting transparency, making markets accessible, and educating people, and applying them in a way that makes sense for their own local market. And that gives us a really clear, actionable plan. Step 1, boost transparency to build trust. That lines up perfectly with India's regulatory reforms. Step 2, make it digital and easy for new investors to join, which mirrors India's digital revolution. And step 3, expand the investor base through education. Sound familiar? It's the same focus that works so well for India. So when you look at the huge gap between these two countries and the strategies that created it, What's the big takeaway? This isn't really just a story about India and Pakistan. It's a powerful lesson about what it takes to build a modern, thriving financial system anywhere in the world. In the end, the source material leaves us with one critical idea. The incredible market success we see in a country today isn't some kind of magic trick. It's the direct result of smart, strategic choices made years or even decades ago. It just goes to show you that building a world-class capital market is a long game, and the best time to start investing in that future is right now.